Hello and welcome to the webinar. If you're watching the recorded version, it was held live on Tuesday, the 5th of September at 7:30 in the evening. So my name's David Jones, and what we're doing this evening is going through the idea of following, copying other traders in our Follower Academy webinar. So what we're going to do this evening, we're going to go right from scratch, really, from looking at the track records of other traders we can follow, right through to adding them into a portfolio and then having those trades executed on a live account. So I've set up a live account for tonight. I think I've put in just over £1,000 in a couple of days ago. So we'll have a look at that tonight. I started following some traders at the end of last week, so we'll be using a live account for all of this. Let me just flip over to the risk warning so everybody can see that and have a bit of time to digest that. So unlike normal trading where you do it yourself, obviously, you decide is the euro going up, is the Dow going down. With social trading, with ayondo, what we're looking to do is build up a portfolio of other traders to follow. I've been doing it for probably a year and a half now, actually, and I must admit my background is in sort of self-directed trading for 20 years. So I was maybe a bit slow on the uptake when it came to social trading, but I think it's a really interesting way of getting exposure to markets, in addition to your own trading if you want to, or instead of your own trading. I do, I still do my own trading. I think it's an interesting way of gaining some exposure to markets and maybe smoothing out some of the day-to-day volatility of what goes on in markets. But let's get started. I think that risk warning has been up long enough. So what I'm going to do, there's quite a few PowerPoint slides, but I'm not going to sit here and just go through loads of PowerPoint slides, but we're using them more as like direction as to what we're going to do next. So we'll spend a lot of time on the platform this evening. So let's just kick it off with slide number 1. So the basic principles behind following traders, we want to identify profitable traders. So we want traders who look like they have a good track record and can provide consistent profits without maybe exposing us to too much risk. I think I'm sure there are traders out there, who can double their account in a year, but if along the way they lose 90% of their account before getting to the doubling position, it's a level of volatility that plenty of people, me included, won't want. So it's maybe trying to find traders with a smoother track record. Then when we find those traders, build a portfolio. With ayondo, you can follow up to 5 other traders, and we'll go through that this evening. Managing the risk. I think one of my concerns when I first started doing social trading was, how can I manage the risk? I'm letting these people trade with real money, my own real money. Is there a way of managing the risk? And there are a couple of different ways where you can really nail the risk down. So we'll go through that this evening as well. And then monitor the position. So like I said, I set up an account to do this, I think last Thursday, an additional account to do this last Thursday for this webinar. So there are a few positions on that account. Maybe some trades we'll go through this evening as well, but I'll show you how you can monitor that on the trading platform. So let's get started. So log in to WeTrade. What's what we're going to do next? So WeTrade is ayondo's sort of social trading brand. We'll look at the rankings list. We'll go through lots of sort criteria for how we find half-decent traders, and then we'll have a look at the data in a bit more depth. So let's flip over to the trading platform. So what you can see here, this is what you'd end up with if you went to ayondo.com. So choose your trading experience. So ayondo markets, this bit here lets you trade for yourself. So the usual competitive spreads, the usual markets you're used to, all that sort of stuff. So you can still do self-directed trading. You can have a social trading account and or a self-directed trading account. And tomorrow I do a webinar every Wednesday at 12:30 with ayondo, which is all about self-directed trading. It's all about looking at key markets to see where the opportunities are. So that's 12:30, the Market Outlook webinar. But we're not talking about that this evening. We're going to talk about social trading. So let's go. Click on here, learn more. Actually, probably what I want to do is log on. Actually, if I go to log on, I can log on to my account. So log into your account. So I'm going to go to my WeTrade account. Here we go. And I've got a few here. Hang on a second. It hasn't brought up the one I set up last week. So let's just put that in. Is that the right password? Oh, let's go off to a flying start, isn't it? Hang on a second. You see, I did prepare all this before I started this evening. There we go. There we go. Right. So we're in. So now I'm into my social trading account on the web. So there's another way of looking at this actually in the platform, and we'll come to that a bit later on. So the first thing we need to do, if we're starting from scratch, is we want to find traders that we can follow. So we want to see, you know, what top traders are there who we can actually follow. So let's go to here. So here we've got search for some of your favorite top traders. So the way it works is, and you could do this as well if you wanted to, but there are traders, clients like me and you of Ayondo, who make their trading records visible. So they show their track record, they show all their live trades, open positions, and if you want to, you can follow them, and if you choose to follow them, then their trades, excuse me, will be activated on your account. So if this person here, Edel Metal, if Edel Metal buys the Dow with a stop loss 50 points away, then that trade, if you're following this person, will be executed on your account. So it's a way of mimicking their trades. But where we start from is let's see who the traders are and what they're doing. So what we're looking at here, we can have a look over, let's say the last year. I think the last year is fair enough. So looking at traders' performance over the last year, we can filter it, if we want to, we can filter it by real money traders, because there are traders who trade on a demo account who show their track record. But my point of view, my approach is, well, if I'm trading with real money, then I want them to be trading with real money too. So I want them RMT, real money traders. Then I can sort by risk score. So I can filter out low risk, medium risk, high risk, that sort of stuff. But for now, let's just leave it like this, and let's do a really simple sort. We will sort them by P&L. So for me, that's where I always like to start from. You know, let's see, okay, what's their percentage return like over the period that we're looking at. So here we go. We've sorted by P&L. So the top performing trader with real money over a 12-month period is this one here, Toomey79. So Toomey79 has got a P&L of 167%. So if we'd put £1,000 in and followed Toomey's trades, we'd have made £1,670 profit. So that's, you know, pretty attractive. However, this is for me, this figure here is just as important as the P&L figure, the drawdown. So this means along the way to making 167% return, how much of that profit was given back. And you can see more than a third of the profit was given back along the way. So that might be a level of volatility that you're not particularly comfortable with, you know. But let's go down the list and see some more. So Giuseppe, just under 100% return, again giving back about a third along the way. Votan, this is a popular one. I've been doing these webinars for a while. Votan has been popping up all this year. Had a bit of a tricky time lately by the looks of the chart, but 82% return, but a third drawdown. I think lots of these traders tend to trade the German stock market, the German 30. And if you follow stock markets, the German 30, the DAX, has had a harder time of it in recent months when you compare it to the likes of the FTSE and definitely the US indices. So I think quite a few of these traders have been hit a little bit in the last few months because of the weakness in the DAX. They've been buying, expecting a rebound, and it hasn't come. So I think this is a reason for a lot of these drawdowns. DAX Call 3 is another popular one, 39.69% return, so nearly a 40% return, and a really relatively small drawdown, you know, only a 12% drawdown. Okay. The other thing I look at from here is I tend to go right to the end and look at the charts. So my background is technical analysis and charting when it comes to trading. So I'm a big fan of following trends, and by glancing at the chart, what I'm hoping to see is a trader with a nice steady uptrend in terms of their profit or loss. I'm not really interested in a trader who was losing money for 11 months and risked it all in month 12 and then ended up with a 50% return for the year. So what I'm looking for is a nice steady profit. And DAX Call 3 has got a good one there. I mean, Toomey at the top doesn't look too bad. Josep after a bit of a wobbly start. So there are lots of interesting traders, I think, just in that sort of top 5 or 6 that I think could be worth a follow. And if we scroll down the list, clearly the returns drop off fairly drastically, but still, you know, a 30% return is is not to be sniffed at. And we can scroll through, you know, if we want to find different types of traders. Jane is actually, he's one I'm following, he or she, I should say, is one I'm following in another account, because look at the trend, brilliant trend in terms of their P&L, 30% return, so not a triple-digit return of our top trader on the list, but the drawdown has been less than 10%, so it's only given up just over 9% of profits on the way. So that's always an interesting one. I'm going to check just to see who I've got in my portfolio at the moment, and then we will pick. I've got Jane in there and DAX Call 3, Edel Metal, Cycon there. Okay, so he or she is in there already. Let's flip back to page 1 and choose to drill down onto a trader and find out a bit more information about their trading style. Which page am I on? I'm on the wrong page. Okay, let's go back to the front page. So let's say we were particularly blown away by TUMI79 and this fantastic 166% return. Let's take a look in a bit more detail. So let's click on TUMI79. Okay, so even though that we were looking at the returns over the last 12 months, TUMI has only been trading, has only been live on the platform since the 19th of June 2017. So some people, probably me included, you know, we've got really less than 3 months of a track record there. Now, making 166% in 3 months is not to be sniffed at, of course, but it does suggest perhaps a somewhat, maybe for some, you know, an aggressive approach to trading, you know, but maybe you want to, you know, you might want to add this person in, but dial down the risk for that person. I'll go through how to do that in a second, but let's just scroll through and see some facts here. So what have we got? So 19th of June 2017 is when TUMI79 first started trading. You can see clearly there's the P&L. So a little bit of a dip at the beginning. So the worst case was off about 9% at the beginning, and then the account grew. We haven't got too drastic, even though we are seeing clearly a pretty big drawdowns there. You know, the P&L of the account is heading in the right direction. So volatility, 34%. That's a pretty high reading for volatility. So this is a trader. If you're craving a bit of action on your account, you know, it looks like this one is definitely going to provide it. Number of trades, 747 trades in 3 months. So pretty active trader. That's not unusual. So this one's doing a couple of hundred trades a month. It's maybe at the higher end of a lot of traders on the platform, but nothing too ridiculous. Winning trades, 89.5% of trades are winners. Again, for me, if that figure, I mean, if that's a high figure, I think if that figure is a little bit too high, it can send out the odd warning that maybe this is a trader who has a problem taking losses, you know, and just hangs on, hoping the market's going to come back. But we'll have a look at some other traders in a second. Winning months, 100%. It's only been going for 3 months. So last activity was today, the 5th of September, but it's only been trading with real money since August 2017, so an even shorter track record. Let's scroll down a bit further and we can see the data. Here we go. So, well, there we go. What a cracking July this trader had. So you can see it breaks it down now on a month-by-month basis. So this lets us see exactly how the money has been made. So in July, 79.8% return in July. So not far off doubling the account in a month, which again suggests it's a great number, but suggests taking on a level of risk that might be too much for some people. August, 33% return. September, 13% return. Year to date, 166%. If we scroll down a bit further, the German 30 has been where most of the trades have been done. So that's the German stock market index. 88% of trades done there. A bit of Wall Street, bit of gold, and a bit of euro dollar. Then we have other risk metrics in here, the maximum drawdown, the monthly volatility, Sharpe ratio, all this sort of stuff, and really how this person has done. And then if we want to, we can scroll down and see their open positions. And maybe as suspected, we are seeing this trader running a few chunky losses down here. So again, this is the concern. If we're with somebody where their trades are, almost 90% of trades are winning trades, the worry always is, are they running trades where, or do they have a lack, an inability to take a loss? And there's a couple of, you know, chunky old losing trades in their transaction history. This is where we can see some of the trades recently closed. So we have, some big winners there, 1,940 on the German market, a couple of smaller winners in there as well, and when these trades were closed out. So these trades, these are just actually trades from the last few hours by the looks of it that have been closed out. And if we want to, we can go through all of this person's trading history. So again, another €1,000 trade there, a €2,000 trade there from yesterday. So we can scroll through. So actually, in fairness, this person does seem to understand that you've got to hang on, and if you're going to run bigger losses, you need to hang on for the bigger winners. It doesn't have there are a few losing trades in there as well. So maybe I was doing the person a bit of a disservice by suggesting they were a bit too willing to hang on to losing trades. But there are a couple of chunky losing trades there at the moment. So there we go. We can build up a picture as to whether we think this is a trader who we'd want in our portfolio. What I'm going to do, I'm going to add this person in anyway, because I've got some fairly what I would consider to be conservative traders. So we'll add that one into my portfolio, and we'll come back in a second and just tweak the portfolio around a bit. Before I add the person in, it says, okay, this trader currently has 14 open trades. If I want to, I can execute those open trades at the current market price. I'm not really interested in doing that. What I want to do is follow any future trades this trader does. So let's just add that trader in. There we go. Okay, let's go back to our rankings list again. Let's go and have a look at our top traders and see if we can see traders who are a bit more conservative when compared to this one. So let's take a look at what are we going to score them by? Who have we got here? Let's score them by P&L again. Should bring Toomey back to the top. If we take a look at one I've been following for a while, where's that one gone? Jane, what are they on the next page? We'll see a different approach, I think, when it comes to risk. Here we go. Here's Jane. So he's the 11th best performing trader with real money. 30% return over the last 12 months, 9% drawdown, really conservative. For me, as a trend follower, lovely looking chart there. No dramas in the chart. So let's have a look on Jane and find out a bit more about this trader. Here we go. So there's the P&L. So P&L. Pretty smooth P&L. So going back to all the way back to February the 15th, 2016. So we've got an 18-month track record here, which I think is a really solid track record when it comes to trading. You can see along the way there's the odd shock, the odd price shock, gets a sharp, sharp drawdown, and the trend carries on. So let's look at this person's numbers. So number of trades, 935. This person's been trading for 18 months, so a lot less active than that other trader we just looked at. So what's that, about 50 trades a month. Winning trades, again, that is a ridiculous number, but it's clearly an approach that works for this one. So 98.4% of trades have been winners. Okay, we'll have a look at that in a bit more detail in a sec. Winning months, 8 out of 10 months end up winners. Last activity, 3rd of September 2017, and a real money trader, important one for me, since May 2016. So again, we've got, not all of this was done with real money, but the bulk of it was. In the past, what's that, sort of 17 months or so, 16 months has been done with real money. Then we see the monthly figures, and for me, these are much more realistic. If you remember, the trader we just looked at made something like 80% in July, whereas, for me, if someone can grind out a couple of percent a month, for me that's a cracking return. But we can see how the money was made in 2016, one losing month in 2016, down 0.8% in December, the rest of the month's profitable. This year has been a little bit harder, but again, the losing months are just blips. April this year, the trader lost 0.5%, pretty similar again in May, and 1/3 of 1% in July, but followed by 3.5% return in August. So for me, this looks like a really sensible, structured, adult approach to trading. So the P&L so far up 23% for the year to date. Let's scroll down and see a bit more. Now, this one trades a few things, but again, the bulk of it you'll see the German 30. So about 3/4 of trades have been done on the DAX, the German stock market index. A bit of individual shares in there as well, by the looks of it. A bit of S&P as well. but mainly on the German stock market. Then we can see max drawdown figures, monthly volatility. So the volatility, what was the headline volatility? Was it was 3.35%. The previous trader we looked at, that person's volatility was 34%. So we're looking at two very different approaches here. I have to say, I know who my money would be on to still be trading in a year's time. But a relatively low level of volatility. Clearly, open positions, again, a few chunky losers in there in the open positions at the moment. And if we scroll down, well, there's lots of open positions in there at the moment, a few bigger winners as well. And then recently closed trades, there we go, we can see some of the closed trades here. So when was that? 5th of September, closed silver trade for 447 euros, 500 euros on Vanguard Emerging Markets ETF. So a few other bits and pieces, so we can scroll through and go through all their trading history if we want to. Now, I think I'm following this trader already, so I won't add them in. Let me just see if I am. Am I following? Yes, I am. Okay, I'm following that trader already. So we'll come back to this in a bit more detail. But that's, it's very easy to rank traders, in terms of what's important to you. And to me, it's the headline P&L. Is where I start from in terms of ranking traders. You can change the time period. So let's see over the last month, what are the numbers that I have? Tumi's up there again, of course. So Tumi's made 64% in the last month. Jupiter made 32% in the last month. Ruddock 23%. So you can have a look and sort of slice and dice this however you want to. But that's a way of getting like a top level view of traders. Let's just flip back to the screen, just to go through what we're going to cover next. Now we've found maybe an interesting trader we'd like to follow. So the next thing we want to do, obviously, is follow traders. Okay, so we want to, if we think, well, this is a good trader, I want to follow that person, we need to follow them. Then from there, we go onto the portfolio builder. So we can build up our little portfolio of people we're following. We can, if we want to, set individual risk levels per trader. I'll show you that in a second. And then finally, the big button push where it starts getting executed on our account. So let's flip back onto the platform. Okay, let me go on Tumi. So he was the somewhat wild card that I wanted to follow. I've already followed him. Let me see. I'm already followed him. Okay. So if I take him out of my portfolio and then add him in again, just to show you how that works. So let's take old Tumi out. There we go, Tumi. Goodbye. And we'll go back to the rankings list and we'll add him back in. So I'll take you through it step by step so you can see how it works. So there's Tumi, our 100% a month man. We decide to follow Tumi, so add him into our portfolio traders. So we'll click on follow. So we get this warning. If they've got open positions, if Tumi bought the DAX a week ago and is still running that position, we can, if we want to, choose to follow that position. But of course, we're getting in wherever the market is now, not where the market was a week ago. And as I said, what I want to do is just follow any future trades. So I don't want to follow their positions. I don't want to execute positions at current market price. So I'll leave that blank. Click on Add Trader. And now it should take me to my portfolio. So here we go. This is my portfolio of people I'm following. So I've got Edel Metal, who's an old good top trader, SciConNet, who I don't think he's traded for a while, that person. Jane, who was the one we looked at, much more conservative approach, much less volatility. DAX Call 3, who again has had a pretty good track record over the years, and Tumi79, the person I just added in. And what it gives me down here, it gives me an idealized view, if I'd followed these traders over the last 12 months, what sort of return I would have made if I could go back in time and follow them. And I'd have made a 61% return. You can clearly see Tumi provides the big lift. Before Tumi, it was still running at a pretty healthy sort of 9 or 10% return for the 10 months. But Tumi gives it a big lift. So it gives me an idealized view of how it would perform. I wouldn't read too much into that, because clearly, unfortunately, we can't go back 12 months ago and follow all these people. We have to base it on the information we have now. But I can change the view to see, what sort of returns I'd have had 3 months, 6 months, 1 week, all that sort of stuff. Okay, so we can see that in there. What's 3 years look like? Let's have a look. No, it doesn't want to, I don't think we've got 3 years worth of data. The next thing to do is to think about the individual levels of risk. So what I can do, I think this takes a little bit of getting your head around, but if we start from the beginning, this account has got just over £1,000 in. Let's pretend Edel Metal is trading with an account that's got £100,000 in. Okay, so Edel Metal's account is 100 times bigger than my account. If Edel Metal does a trade and puts a stop loss, that means he or she is risking losing 3% of their capital. So 3% of 100,000 is £3,000. The trade will be done on my account, but clearly it's not going to be risking £3,000 because I've only got £1,000 in my account. But the trade is done on my account for the same percentage risk. So if Edel Metal risks 3% on their account, then the trade will be done on my account, risking 3% on that account. So hopefully that makes sense. You know, so that's one way where the risk is managed. You know, if they're placing their stop loss, I don't know, 100 points away, and it means they're risking at the size they trade 2% of their account, then the 100-point stop loss will be done on my account at a size that means there's 2% risk on my account. And when you look at in a few minutes time, when we look at the open trades on my account, all of this stuff will start to make sense. So, but what you can do, you can dial up or down the level of risk for each trader that you're following. So before we start doing anything, we'll click on here. Click on, sorry, what I clicked on there, just to show that a bit clearly, is the little settings button here. So what I can do is, I can decide if I want to magnify the size of the trades they're doing, or if I want to dial it right down. So let me just explain. Please select 1 times if you want to follow this top trader proportionally. So if your top trader loses 2% of his capital on one trade, you'd also lose about 2% of your capital on this trade. But that's only true. So that would be if we were following them 1-to-1. So 1-to-1, we're mirroring their trades in terms of risk. But that only applies if we're following just one trader in our portfolio. Now in my portfolio, I have got 4 other traders. So I'm following 5 traders. So as it says here, if you follow several traders, then your risk is distributed evenly amongst all the traders. So with 5 traders in your portfolio, you're effectively following every trader a fifth of their risk. So I hope that makes sense. So I've got 5 traders here I'm following. Let me just click that off. So what it means is my risk is already being reduced by a fifth. So if Edel Metal does a trade where they're risking 1% of their account in a trade, on my account, if I'm following Edel 1-to-1, I'll be risking a fifth of 1%. So I hope that makes sense. And again, when we jump onto the platform to see the open trades, you'll see how this works and how tiny these trades are. So there we go. If I'm following Edel Metal 1 times, in effect, I'm only trading a fifth of the size, a fifth of the percentage risk Edel is. So if I've got confidence in Edel, and I'm following 5 of the traders, I need to bump that up to 5. So what that means now is if Edel risks losing 2%, I'm risking losing 2%. If I bump that all the way up to 10, if Edel is risking losing 2%, then I'm risking losing 4%. So I can magnify the risk that way. But if I put it at 5, when I'm following 5 traders, it means I'm risking the same percentage risk that Edel is. Let's click on confirm. So that's done. PsychonNet, again, I can choose a level of risk, depending how happy or not I am with that person. And I might think, well, I'll knock that one down. So I'm only doing effectively a fifth of their size. And so I can do this for all the individual traders, and I can set it for individual amounts on different markets if I want to. So I can really drill down to that sort of level. If I think this person does particularly well on the DAX, but not so well on the S&P 500, I can dial the risk up and down. But for now, let's just leave it. Let's just leave it at that. So Jane, what did I put Jane at? Let's put Jane at 1 times, confirm settings. Actually, let's bump Jane up because Jane has got a sensible track record, and I like this person. So I'm going to risk. I'll mirror their risks. They're risking 1%. I'm going to risk 1%. DAX call. Okay, 0.5. We'll leave it at that. And this one here, to me, because I think has a somewhat aggressive approach to trading, I'm going to bump that one down. So I'm risking half, but actually what I'm doing, if they risk losing 2%, because I've got 4 other traders in there, my risk would be a fifth of that anyway, but I'm halving that again. So I'm taking tiny risk with old Toomey. There we go, we're ready to go. So there are all my traders in the portfolio. And really I'm ready to go now. And what I can do, because I've set this up already, it's already running. But if I stop execution, and we'll start it again, deactivate execution. So if I change my mind, maybe halfway through a month, and I think actually I might want to trade my approach, or I might want to change something else, then it's very easy just to click on stop execution, and it stops you following any more trades and closes any open positions that may be running on your account. Okay, so assuming I'm starting from scratch, execute on live account. That's it. So I'm starting now with my portfolio. I've got no open trades in my account. It goes through this check again. Well, this person currently has 166 trades. That one's got 18. Do you want to mimic their existing positions? No, I don't. I want to follow new trades. So that's it. Away we go. So now I've set this up to follow any new trades these people do. So these were all the trades that I closed out when I said just to close all the positions, and we'll walk through these in a second. But now all of those 5 traders I'm following on my account. I've got just over £1,000 in the account. I've got no P&L because no trades have been opened yet, but any trades that these people do will now be followed on my account at the size I've set. Another important level of risk is this thing here, loss protection. So not only do we have the ability to decide what level of risk we want per trader, you can also set up what is effectively a stop loss on your account. So you can say, regardless of what's going on with all the traders and all the markets, if my account balance falls to a certain level, I want all trades closed out and I don't want to follow any more new trades. And that's this thing here. This is loss protection. So here we go. So my balance is £1,034. The trigger equity must be under at least 5% of your current equity. So it's got to be, or at least, what, 50, 60 pounds away at the moment. So let's say I'll say, well, if my account balance falls to £700, please close all the trades. So I don't want to take any more risk than that. So even though I've got £1,000 in my account, I'm effectively putting a stop loss order on my account. Click on save. There we go. That's done. So now, if that balance falls to there, all the trades will be closed and no more new trades will be followed. Something else to stress, actually, ayondo have this thing called negative balance protection. So if you've traded sort of spread betting or CFDs in the past, you'll know there's the classic risk warning: you can lose more than your deposit. So if you put £1,000 in and the market has a massive move against you and you don't have any stop losses, you can end up owing your broker money. With ayondo, you don't have that. So with ayondo, your account balance never goes below 0. Okay, so what you put in is your commitment. But then again, you can set this extra level of protection by putting the loss in your account, the loss protection in your account. Let's look, before we have a look at the other bit of the platform, the Trade Hub part of the platform, let's just look at some of these trades. Some of these trades that have been closed out when I stopped the execution. They really are tiny, because I'm following these guys in tiny size. Let's try and find something. US volatility future. The size was 0.023. So it's less than, it's about just over 2p a point, because I've dialed the risk right down. So on my account, with some of the trades I'm following, they really are, tiny trades. So, for example, let's look at this losing trade. The DAX German 30 was bought at 12,095, was exited at 12,073, all automatically, of course. So it was executed 22 points lower. I lost a penny on that trade because the size it was being traded at, it was being traded at really tiny. Okay, so because I've dialed in the level of risk I want. So again, you can really set how much exposure that you want or don't want when it comes to trading. So there's our account. And let's have a look at in a bit more detail. So for me, I've got a couple of accounts that I use for follow trading, copy trading. And in the beginning, I would be glued to it. I think like you'd be glued to a normal trading account. But now, because I understand it a bit more, and I've got the risk controls in place, I'll check it maybe, you know, every other day. And the easiest way of checking is just via the website like this. You know, I go to ayondo, go to my account, and I get what is in effect a high level of view of what's going on. What's my account balance? What's the P&L? What have been any closed trades? So I can do that really easily. But then if you want to have a more in-depth view at your open positions, you can use the trade hub for a more detailed view. So let's just access that from here. So from the drop-down menu up here, we're going to go to trade hub. I really shouldn't have closed out all those trades because we could have seen them, but we can, let's put it in here, social trader, there we go, log in. So this is maybe more of your traditional trading platform. So these are my positions. Let's just close that out. So my cash balance, hopefully, let's make this full screen. So my cash balance, you can see up there, £1,034.18. Open P&L is 0, account value, blah, 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 blah. So, but if anybody does a trade now, it will appear in my positions window in here. So again, if we look at some of the closed trades, here we go. So these are all the trades that were closed out automatically when I said close position. So again, you'll get an idea for the size. So let's have a look at the German 30. So there's a German 30 trade that have been placed in there, and again, the size is absolutely tiny. I mean, that's the fraction of a penny size that trade was done at, because I've got a relatively small account and the risk was dialed right down. And you can see actually it's a lot of these trades have been so small that not much profit was actually made. But it's very easy within Trade Hub to monitor any open positions, see what's happened in your account in the past, see the trades that have been closed out, you know, so you in effect get a statement of what's been going on with your account. So that's from last week. That's some of the trades. Look at those massive profits I was making, because again the risk was dialed right down. And I think it's a really good way to start. If you want to start copy trading, put £1,000 in the account, but dial the risk right down. You know, follow these people at the lowest level you can to give you the confidence that actually there's a sensible way of doing this and in managing the risk. And in the normal way, you know, you can look at markets if you want to. So if you want to look at, let's see what the US market is doing tonight, because it was falling off a cliff a little bit earlier. I think we see maybe a bit of stability come in. So here's the Wall Street market, the Dow Jones. Let's have a look on the hourlies. You can see it sold off really sharply from the open. It's come off a couple of hundred points this evening. So you can look at markets in the normal way, as well as monitoring the traders you're following. Yeah, someone's asked, can you add your own trades in Trade Hub? You definitely can, but what you should do, you should make sure you're doing your own trades in your own self-directed account, because this is a social trader account, the spread is a little bit wider. Okay, so that's because these guys, when you follow their trades, clearly there's got to be something in it for them. So in effect, they get paid what is in effect a commission, you know, via ayondo. So the spreads are a little bit wider. So that's why you might want to make sure you log into, here we go, hopefully you can see it down here on the drop down list. Spread betting, social follower, that's where I am now. And if I go to spread betting trading, so there we go. So this is an account for trading, and I don't use this account that's tied to that social account. So it's only got £58 in there. So it's very easy to flip onto doing your own trading. If we go back to our Wall Street market, there we go, Wall Street rolling, and you can see the spread, hopefully you can see that, the spread is tighter. So we've got a spread of a couple of points rather than the 4-point spread we had in our social follower account. But hopefully you can see it's really easy to flip between following people and doing your own trading. And of course, if there are trades in there, like if I hadn't closed out those trades before we came into this, if there are trades in there that I don't agree with, I can close the trade out. So if a social trader has done a trade and I think, well, actually, I don't want that position anymore, I can close that trade out manually as well. So even though we're following them, you're not tied in to the end of the trade if you don't want to be. Personally, I think that somewhat defeats the logic of social trading, of following people, because the whole idea is we let them do the trading and we just sit here and manage the risk. I think, you know, the way I tend to look at it, it's like being a a football manager or a hockey manager or whatever, rather than getting out there on the pitch. But if you want to, you can close the positions yourself. So hopefully that bit makes sense. Let's just flip back to the PowerPoint presentation. Okay, so let's bring that up. So with TradeHub, you can do all of this stuff. You can do all the normal stuff that you can do on trading platforms. You can adjust positions. You can view your account history, just like we saw there, including the financing costs. Because of course here, we're trading on leverage. We're trading using margin. So there will be an element of financing involved. You can create account statements and you can add funds. This was a dormant account that I've not used for a while, so I put a bit of money in there end of last week, so it's very easy to do that from TradeHub. You saw how we logged in. You can log in direct from the web platform. So for me, the web platform, WeTrade, is the high level view of what's going on with my account, and then it's easy just to log on and go into TradeHub. And you have all these features that you saw on my account there. You've got the cash balance plus any P&L, your account ID, of course, what your P&L looks like, liquidity, which is calculated this way, account value minus 20% of cash balance divided by 80% of cash balance, so how much you've got free. And that's, you can change positions, you can monitor any open positions that you've got if you're following other people. Actually, let's show you this. If I flip back onto TradeHub, let's do a trade. Why not? It wouldn't be a webinar without doing a trade with it. So let's just flip over to the self-directed trading. I've got £58 in there. Is that enough money to do trades? Let's find out. So let's have a go on the indices. I don't know if it's enough margin to do a trade on the Dow. Let's bring it up. Wall Street. Yeah, let's trade. What's the smallest we can trade? Minimum 0.5. I might not have enough margin to do that. Let's see it. Buy, place trade. Oh, insufficient margin. I'll tell you what. I will do what I said you shouldn't do, and I'll do it on the social trading account. Let's bring it up here. So I'm going to pay a slightly wider spread, but I know I've got enough money in here to do it. So we'll do half a P. I'm going to completely buck the trend in the Dow. So the market's been falling all day, so I'm going to buy the Dow. I'm going to take the view the bottom is in for the market, and we'll buy the trade. There we go, we're done. So we're in. So we're in on the trade, and then of course with TradeHub. So let's say I'd followed this. I'd followed somebody doing this trade. There's my open position, and if I'd done more than one trade on the Dow, I'd have an aggregated position in there. But it's usually, you can do the usual stuff. You can set things up like stop loss orders, take profit orders, that sort of thing. So if I wanted to put a stop loss on here, let's try and do this at least remotely sensibly. Let me put a stop loss. What's the low of the day? The low of the day is 21,707. Right, so let's put our stop at 21,690, 695. There we go, and we'll take profits at 21,950 if it ever gets back up to there. Oh no, we won't, not that. It won't get to that level. 21,950. There we go. So 21,695. Submit changes. Done. There we go. So now if I go into my open positions window, I can see all the details in there. Take profit, stop loss order, and the take profit order. And if we were following traders and trades have been done, we get to see all of that information in there. If you want to get really detailed into things like the financing costs, let's just jump back to here. So if you hold a position overnight, there's normally financing costs to pay. They tend to be pretty tiny, particularly if you're trading at a really low level to start off with. But you can see all of that within TradeHub as well. So it gives you a detailed view of what's going on. You can pull statements off, all the usual stuff. And it really is as easy as that. But for me, the main part of social trading is that sort of high-level view, starting off here. Oh, actually, you can see. So my trade has come up in my high-level view. Trader NA, because it's me who's actually done the trade, and there's my profit. There's not my profit. There's my position. Bought to 21,950. No, it's not. 21,743. Stop at 695, and you can see my P&L, my massive P&L, updating there in real time. So for me, when I'm looking at people I'm following and how well they're doing, I tend to go for the high-level view. But if you want to pull off things like statements, etc., you can jump onto TradeHub and find out a little bit more information. But for me, the whole idea of follow trading all starts with this rankings list. you know. And someone said, how often do you need to check it? Well, for me, I've actually blogged about this. I did another account, and I started it in February. It's due an update, but if you go to my website, which is tradeafter.com, there's I think 5 updates there of the account right from the start, putting a couple of £1,000 in, following one trader 1 month, and following another trader the month after, and you can see the progress there. What I tend to do is only really review traders after sort of 1 to 2 months, because I think if I'm taking a view on someone's sort of P&L over the last year, if they have a bad sort of 10 days, it's a bit sudden to boot them off my list of traders I'm following. So I do try and be, I think, a little bit patient when it comes to saying, well, actually, this trader really isn't performing. I did have, I think, a bit of a nightmare with one I followed in March, who I think that the very next week blew all the profits they've made, and I think just stopped trading. But it didn't, I mean, it affected the P&L, but again, because I was following 5 traders, the risk was spread out, because this was quite a new, aggressive trader, like the one we've added today. I dialed the risk right down. So, you know, you can protect yourselves from track records that suddenly go a little bit awry. You know, there are things you can do. But for me, you know, like I say, I check in maybe every couple of days, the high level view as to how is the P&L going. You know, is anything going drastically wrong or drastically right? And then when I want a bit more information, I'll have a look on the Trade Hub, on the follower account on Trade Hub, and just see, you know, if I want to pull off details of trades closed, if I want to add more money, that sort of thing. And then if I want to trade myself, you know, just jump over onto the drop-down menu here, go to spread betting trading. Clearly not on this account because there's not enough money in it, but just trade directly from there. Someone's asked, is it more risky than trading yourself? I would say it. You see, considering, you know, it's no secret that most people lose. You know, most people lose money when it comes to trading. You know, it's a very high percentage. So if 10 people were stood in front of us now and had never traded before, and you had to bet with them, you'd have to bet. You bet with all of them they were going to lose, because maybe over the next year, 2 or 3 might be profitable. So, you know, it could be argued that following people with what appears to be, you know, a reasonably good track record, like the Janhay person we were looking at before, you know, does appear to have the ability to deliver profits over a period of time. You know, you could make the argument it's a far safer way of trading. Don't get me wrong, I still trade myself. You know, I still trade, you know, probably, I don't know, 3, 4, 5 times a week. So I still, you know, sort of do my own stuff as well as doing copy trading. And I think if you're an active trader, this maybe adds another string to your bow. You know, maybe another way of getting some exposure, smoothing out some of the volatility, and hopefully a way of complementing your own trading. How many traders is it sensible to follow? Good question. I suppose you could just follow one if you really wanted to. You could just follow one. You're limited to 5, which I think again is. I tend to follow 5. I tend to go the whole hog and follow 5 traders. But if there wasn't really like this one here, the one we added, I'm sure that he's a very nice person, but it's got a bit of a short track record. It seems like a relatively high risk approach. You know, if we were doing this with like another account, not for the purposes of the demonstration, I might take him out as soon as we finish the webinar tonight, and then I probably wouldn't be following this person. So I think it's up to you, but for me, I tend to follow 5. You know, but don't force it. If you only find 3 traders that you want to follow, just follow 3. Again, on my blog, you know, I think I followed 1 for a month. I did 1 the month after, and 1 the month after, or maybe 2 the month after that. You don't be in a rush to add people in straight away, you know. But I tend to sort of work on a maximum of 5. Let's go back to my account and see what's going on. I guess it's just going to be sort of chop, isn't it, into the trades, into the close now. So that trade is up a little bit. At the moment, that is the only trade done. So at the moment, none of the people I'm following have done any new trades. So the only position we've got open, if I bring up the open positions, is the one I did. Oh dear me, if I could click the right thing, is the one I did myself, and that's in there now, and that's not doing very much at all. But hopefully it's as straightforward as that. You know, I think the rankings lists, you can get an awful lot of information from a very simple top-down view as to who's been doing that. And once you start doing copy trading and following people, you do see the same names coming up time and again. So you do get a feel, I think, for which traders are maybe something of a flash in a pan, here today and gone tomorrow, and those who are maybe a bit more solid. I mean, Votan's been in there a while. Edel Metal has been. I started doing these webinars, I think it was July last year with Ayondo. Edel Metal has been in there since then. I can remember Edel Metal from last summer. Look at this one here. Patience seems to have had a bit of a nightmare. So Patience here, you can see a real money trader, but I'm not quite sure what's gone wrong here. But look at that. I mean, it was bubbling around the 0% mark and has lost 20% in under a month. You know, so that is after having winning months of 60% winning months, but just got absolutely clobbered. And this is a problem, making small profits. I'm sure we all know this if we've ever done any trading. You know, it's no good making small profits and then hanging on to losers, because you'll end up, your P&L ends up looking something like this. You know, scraping a small profit and then taking a massive whack. So I think there are obvious ones where you think, well, actually, that's not a trader of interest to me. And there are ones who do come up on a regular basis who do appear to be sort of sensible, solid traders. Let's take a look and see if there are any other names. Oh, Joe Investor's been in a while. Let's take a look at Joe Investor. I don't think I've ever actually followed this person. But again, so there's their chart, the P&L in orange. The purple dashed line is relative to the DAX, the German 30 index. So are they outperforming or underperforming the DAX? 2 to 5 years experience, volatility 2.3%, so low volatility trader. Winning trades 56%, much more realistic number, I think. Real money trader, just coming up to a year now almost for Joe. It's an interesting one actually. So 51 followers. Return, what's the returns been like? 20% return over the last year, perfectly sensible, I think. So look, 16.7% nearly so far this month. So we can see that's when the trading started. Only losing months so far this month, down 1%, but 3 losing months and 6 winning months so far this year. So for me, you know, a trader like this person, this is the sort of thing I'm looking for. You know, I'm not, you know, I don't expect people to be making 200% a year, year in, year out. But if someone can sit there and grind out a steady profit quarter on quarter, it looks like an attractive trader for me. And I think once you start looking at these trader rankings, and I think if you're watching this and you don't have an account, I don't think you need an account to take a look at this. You can maybe have a look on the Ayondo website and scroll through some of these traders, but you do tend to see, I think, the same names, you know, coming up time and time again. I mean, this is another interesting one. Maybe Just Trade It. It seems to have a nice chart. Anyway, I'm not quite sure how long they've been trading for. Okay, trading real money trader since March 2016, and again, you know, 20% return, not to be sniffed at. Let's have a look at the monthly numbers. Not one losing month last year, didn't start till March, and currently in their second losing month for the year so far. So I think once you get a bit of experience and a feel for the sort of thing you're looking for, there are, I think, relatively low volatility traders out there, you know, and you can dial that risk down to a level that you're perfectly comfortable with. So I think if there's no more questions, we'll start wrapping things up there. If you haven't done sort of social or copy trading, take a look. I think it is, you can start off, if you open an account, you can start off with a demo account and sort of play around with it for a month and follow some traders and then do it with real money. But even when you're doing it with real money, you don't need to take on a level of risk that's ridiculous. You know, you can set the risk to whatever level you're happy with. And like I say, to read a bit more about my experiences with an account I set up earlier this year, purposely just to blog about it, if you have a look on my website, which is tradeafter.com, there'll be sort of step-by-step stuff that I did there. But I think for this evening, we'll wrap things up. Thanks for coming along. We do regular evening webinars with Ayondo, and I do this regular Wednesday lunchtime market outlook webinar with Ayondo, where we look at not so much the copy trading, but looking at levels to look out for, trends in the markets, that sort of stuff, so opportunities for self-directed trading. So take a look at that. If you can't attend at 12:30 on a Wednesday, there's always a recording available if you register for the webinar. But we'll wrap things up there. So thanks very much for coming along, and if you've never tried copy trading, take a look at it. But any questions, can I put my email address on there? If you have any questions, I'll send it out to you on the chat. Actually, let me send it out to you now. So it's david@jonesdc.com. There we go. So any questions, drop me an email, and the website for the blog that I've been doing on a real account is tradeafter.com. But we'll wrap things up there. We'll stop the recording, and I'll let you get on to enjoy the rest of your evening. Thanks very much.